Good evening, everybody. We're going to get going in a couple of minutes, so thank you for your patience. Hi, Annie. How are you doing? Yeah, I'm good, thanks. Okay, then, everybody, thanks for your patience. So welcome to this evening's webinar from ACY Securities, Forex Trading Live Market Analysis. My name is Duncan Cooper. If you're on YouTube, I can't see the chat. So if you're chatting to me on YouTube live stream, then I just won't see the chat. You need to come into the live webinar. I'll put the link there in the chat for you. Just register and come on in. All right, before we get into it, please read through the risk disclaimer. And as going through the webinar, if you have any questions, just type into the question and answer box. Got the chat box open too. All right, so tonight's webinar is live market analysis. Now, if you see something that you want to trade based on my analysis, that's entirely up to you, but you're making your own trading decisions. So that's what the risk disclaimer there is explaining to you. All right, so let's get into it. If you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at ACY Securities. I'm a full-time trader. I've been trading the market for more than 15 years and mentoring clients for more than 10. If you want to contact me, my email is on the screen there, duncan.cooper@acy.com. Just shoot me an email. If you want to follow me through the week, at our website, acy.com, go to the Market News tab, our YouTube channel, ACY Securities Australia. And you can connect with me personally on Twitter and LinkedIn if you want to. As well, through the week, in our Telegram channel, I'm posting some analysis based around the webinar education series that I deliver, looking at trend, support and resistance and the trading levels that I'm watching through the day or through the week to trade around. If you want to get access to that, contact Nathan Bray at acy.com. So Nathan.Bray, I'll put his details in the chat in one moment. And I'll do that now. As well, if you want to get access to my chart layouts, then just contact Nathan. He will organize that for you. So let me put that in the chat for you. Just email Nathan or call him. I can get my copy and paste to work. There we go, that's in the chat. All right, before we get to the charts, I just want to go to have a look at the news items coming out for the week at forexfactory.com. Now, the market's a little bit range bound, and that's because we've got the FOMC statement coming out Thursday morning. So there's a little bit of movement, then we keep flopping back down. So nothing's really moving, say, upwards and holding its gain before moving back down because it's rather range bound. So you just need to be aware of the news item coming out, the interest rate decision for, this is Queensland time, New South Wales time, 4 a.m. in the morning on Thursday. We've got potentially 75 base point rise on the US interest rates, but we'll have to wait and see. So at 4 o'clock in the morning, we've got the statement, and then at 4:30 we've got the press conference. So it'll be volatile, I'm sure. I might open something before then, but I'll probably have it all closed down before then because things will be exceptionally volatile, and I could try and maybe take a position with a trend, but it all depends where price gets to at a given point in time if I want to hold a trade open. So at the moment, it's very volatile. Tomorrow morning, we've got the CPI coming out for the Aussie. So that's at 11:30 a.m. News item at midnight tonight for the USCB Consumer Confidence. All right. So, but the big one is the FOMC statement. So let's get to the charts. I just want to click through, see what is going on. Did some video analysis this morning on the Aussie Yen, which is kind of failing in the area that I was discussing. Just want to quickly look through all the pairs. So with the market being so range bound, I'm really looking to trade from a resistance or a support area, not in the middle of anything. So potentially nothing's quite at a level that I'm looking at. Some of these pairs are at the central pivot points. So you can be looking for movements back up from the central pivot points. All right, so I don't think it's anything imminently setting up. Just want to have a look at the pound dollar on one more moment. All right, I'm going to start with the dollar index and we'll work through the other pairs. So last week we had a week down, and on the monthly chart here, we're failing at the, well, I don't know if we're failing, but we're drawing from the monthly resistance that we're testing at 108.09 up here and 109.24 from back in time. But the trends aren't changing on the highest time frames. Monthly trends up, but we're having some selling pressure from that area. The weekly trend, we just had a week down. That's all. Maybe that's all, we're having a week down, and then when we get the interest rate decision, US dollar strength comes back in and we push up to retest those levels. So the daily at the moment, it's maybe forming a little bit of a support area here. Maybe 3 days of holding here to move back up and retest. So we're just having a week down last week. Nothing too much telling me that we're getting a major reversal on the dollar index. Nothing goes up forever before having 1 or 2 weeks of a pullback. So what I'm noticing on the S&P 500, we are getting a bit of an uptrend on the daily there, holding on weekly support. And the weekly trend here is starting to make high tops and bottoms. So we might be getting a deeper movement up here. All right. Not seeing it's not anything significant at the moment, but I'm just looking at what's the stock market doing, what's the dollar index doing. So we're seeing a bit of weakness on the dollar index at the moment and a bit of positivity on the stock index. All right. And really, this is maybe just a bit of short covering. The sellers are closing their positions ahead of the interest rate statement, maybe on the index. And this is just moving it up a little bit, wanting to know what the Fed's going to say on Thursday. All right. People are starting to want to get their positions closed. They want to be on the sideline because they're not quite sure what's going to get said or done. All right, so I'm going to start with the Aussie Yen. Now, I did some analysis on this pair. I'm going to go to my other charts. Last week, I get to my Aussie Yen. That's the wrong pair. Here we go. Last week, we had a rejection candle here, up at weekly resistance. Now, I know the trend's up on the weekly, but there's your inverted hammer rejection. Are we moving back down to this area of support down here, this day support level, this weekly support level? So we're rejecting up here. on a weekly. So what I've done from the webinar that we had last week, where I was looking at the candles, is I've colored in last week's candle as a negative candle. It was actually blue, but it was a big rejection, so I made it red. And there's the fib drawn from last week's high. We just broke last week's low on Monday, so I'm just dragging that fib further down. And what I'm seeing is this is moving up toward, it's holding at the 62 area. It'd be nice if you got up to the 79 level, which coincides with daily resistance over here. So I'm looking for this to be failing between the 62 and the 79 turnover. I'm not in it at the moment. I'd much prefer this to get up to the higher reach, 95.32, 95.35. Cameron, I saw your email come in and you're asking about the 79% level. I don't really care if it fails at the 79 by a couple of pips. I might have my order sitting there, but if it starts to fail a couple of pips short, I can just change my order and click in. So generally, if it was this scenario where I've got, say, resistance and then the 79%, I'd have my order at the resistance, okay, whichever comes first. So I'm looking for this to potentially finish a move up here to move down, okay. Looking to see, I'm still waiting to see if it can get up to that 95.32 level. All right, just got dropped down to my other charts on the 15. I mean, it's already showing some form of a breakdown intraday at the moment. Whether or not it can have another stab up here. If it doesn't have another stab up, then and we're further down the chart today, then I may well then be looking at the 95 level tomorrow to try and trade down from. I'm just waiting to see if it wants to get up to the 95.32 level or not. I'm always trying to get in at the best price if I can. Slav, you're asking, would I put a short order on it before the Fed interest rate decision? I need to be in it early tomorrow. Once we get into London, I don't want to be sitting on a trade that's not moved. So, Cameron, you're saying, so that's 6 pips away from the 95.32. Is that too far off? What play? At the end of the day, you have to make a decision yourself. Do you want to trade at the resistance level or the fib level? 6 pips is nothing. Price can move through resistance and hit, say, the 79% level 6 pips away. You just need to make a decision yourself what you're going to do. 95.32 is the more obvious level because you're kind of front running your order a little bit ahead of the 79. So, you know, that level that up here, or is it more like 4 pips on my chart, but, you know, I'd go at 95.32 because it's a closer level of the two in case price doesn't want to quite get there. But you know, often I will have my order sitting at 79. Sometimes I miss. So, but in this case, I would be going at the resistance level because we've already tagged it here intra-day, kind of on the 4-hour chart. So hopefully that answers your question. I know you said you sold at 95.65, took profit. So you sold up close up here at the failure last week. We talked about that last week. And you took it off at 94.49. All right, well, that was good effort. All right, so just waiting to see if this can get into that 79 area, the daily resistance area or not. As I say, if it doesn't, on my other charts, then I always have the option tomorrow, if we're below the 95 level, does it come up and fail at the 95 level? Okay, so there's always other options to get in. I'm just seeing whether or not it can get up there. For looking at price at the moment, I'm guessing it can't, but you never know what the next 12 hours will bring. All right, Aussie dollar. Now in the Telegram, I posted the idea of this failing at 69.67, which is on my day chart. Get rid of that fib. These lows over here, this low here, this is a monthly low. Broken support becomes resistance, so there's another monthly low there. So I was looking at two levels, 69.67, 69.91. We tagged it on Friday, 69.67. Yesterday, we couldn't touch it. So today I was looking to see how we would respect this area today. All right, starting to break down now from tagging, moving above, moving below, retesting, failing there, starting to get a trend line break to the downside. There's also at this high of the day, we've got some divergence on the 15. So this looks like it's breaking down now through that trend line, you know, failing at the monthly resistance. So that moving down, and the Aussie Yen's moving down there as well. So a little bit of weakness across those two pairs at the moment. Euro Yen, this had a massive sell-off last week from the interest rate decision. Go to my other charts to the Euro Yen. All right, so what I might do is just get rid of that block so we can go to the higher time frames and I can put it back. All right, so the weekly chart here, we've rejected up here, and 141.04 is a monthly top that we are holding at. If you got a monthly chart, you'll see it. All right, but you can see that big weekly rejection candle there. So Thursday, Friday, heavily sold off. We also failed at daily resistance here. So what I'm doing on my 4-hour chart is just put back in, that's the candle, just referencing the candle for last week, drawing a fib across last week's candle. Did break the low yesterday, so I've dragged the fib just down to the low point. But what I'm looking for is, can this come up within the range of last week to the 62, which is at 140.94. That's close to monthly resistance, 141.04. Or can it go higher up to, you know, the 79% level? Now, I know that looks a long way away, but when you were up here last week, you would have thought down here was a long way away. So it's more than possible to get up into those extremities some point during the latter end of the week. So very negative candle last week. Now, price might not get up to those discount levels that I'm looking at, but I'm always trying to trade at a discount. So whether or not price can get back up to those discounted levels, we'll have to wait and see. At the moment, the 4-hour structure here is actually turning a little bit to the downside. So maybe it can't, but well, I'm just monitoring. So I'm looking at 62 level, the 79 level, 62 is at 140.94. A bit higher than that's monthly resistance, 141.04, and the 79 level at 141.54. So this whole area up here where price would be, you know, what I would class as a discount price, can price get up there? We'll have to wait and see. We can re-look at that on Thursday, and I'll keep you up to date about what I'm seeing in the Telegram through the week. So I'm not that interested at these lower levels. I'll be much more interested in trading up at these higher levels on that pair. All right, Annie, you're telling me, yeah, you got in just after the webinar, I think, on Wednesday then, because I saw on Wednesday when we dropped down on the Aussie Yen, there was a big candle that dropped. So you must have got in close to after that failure, I'm guessing. All right, so Euro Dollar. Now, what I've done here, same kind of story. This is last week's candle, drawing a fib across that range. And what I've noticed is into the latter end of last week, we already pulled back to the 79% level of that weekly candle. So I'm expecting, or I'm hoping that price will actually pick up and come up the range here to the 103.40 level. All right. So at the moment, though, it's not looking as though it might get there because things are very consolidatory. But when we get the FOMC statement coming out, this could easily spike up. So at the moment on this pair, I'll just tidy these things off and go to the day chart. In this area here and in this area here, we've got monthly broken support at 103.40. We've got weekly, so that's resistance. We've got weekly resistance and we've got daily resistance here. So we've got a whole band of resistance up here from 103.40 up to 103.59. If we go to the weekly chart, I discussed this last week, so nothing's really changed. From its lower top to the bottom there, I am watching the 62% area as well at 103.61. So that kind of marries up with from 103.40 up to 103.61. There's like a 21 pip resistance area there that I'm watching. Does price get up there when the FOMC statement comes in? At the moment, you know, on the 4-hour chart, this is very range bound. Just going to put that fib back in that I was just discussing across last week's range. And what you'll see across last week's range, if we break above the top, 127 extension of last week's range comes in at 103.31, close to the resistance level that I'm watching. So I'm waiting to see if price can get up to a higher level, to a level where price is potentially stretched and we'll want to move back down from. Okay, so I'm not really interested in all this choppiness that we've got here at the moment. Now, price might not get to that level and I'll have to reassess things after the interest rate statement. But at the moment, I don't want to be trying to engage in a trade in this area at the moment where it's all choppy. And then the interest rate statement comes out and spikes up there because then that's going to go against me. So I'm going to be waiting on the sidelines. What I'm trying to do is look at, I'm obviously looking up at this area here, is where's the most optimal level to get short within the overall longer term trend. In the middle of this range here at the moment, you know, the lower reach of the range is down here, upper reach is up here. This is in the middle of all that. So if I wanted to do something, you know, a better area to watch ahead of FOMC is just price come up to the top of that range, about 102.75 area. Last week's high up here, so it's on 102.77. Does price come up and challenge last week's high and fail and move back down the range? That would be the area that I would watch at the moment. But my optimal level is up here, so I'm going to wait for my optimal level at the moment on that. All right, pound yen. Again, I've done the same thing with the weekly candle here. I just don't want to get rid of that line. All right, let me just get rid of that fib in the box. We'll put those back in a moment. So very range bound is the pound yen, but what we had from a weekly chart perspective is a very negative week that we rejected up here. And we failed once more at the 164.64 level. So on the daily chart, it's this area over here, which has been used as support and resistance for many, many weeks. Another support line came in here, a couple of pips above. And we were above it last week. We fell below it. And you can see today we're rejecting it. So if you got my commentary on the weekend, trying to trade down for 164.64 would be ideal. Obviously, we're not at 164.64. We're a bit below it at the moment, but we could come back up and touch it once more. And this could be well moving back down to support down here from these highs. 161.85, 161.100. So back to my 4-hour chart and my ranges. All right, that's the candle of last week, showing the range. We did just move fraction below it Monday, so I've drawn my fib down to the low point. And, you know, we covered this, or I covered this on Wednesday last week. See how it's come up to 62? It's touched it once, twice, almost 4 times on the 4-hour chart and then failed. So what I'll be looking for, if you're not in and you want to trade this pair, See if it can come up and retest 164.64 and fail now. This is an all probability now. Could be putting in, already have put in the high of the week. And we're moving down to, you know, last week's range projected down from that high, comes in at day support at 161.85. All right. So I can just keep my fib, get rid of that line. So there's the 15-minute chart. Can this come back up and fail at 164.64 to trade down? All right, that would be what I'll be watching for on that pair at the moment. I don't want to be selling it at the bottom of the run. I'm always trying to look to sell a rally, okay? So hopefully all that's all making sense in terms of where we're positioned in relation to last week's candle. We've retraced 62% of it. Are we now moving down to put in the low of this week's candle, okay? All right, pound dollar. I'm going to go to my other charts for the pound dollar. All right, 120.74. You'll need to go to your weekly chart to find it. It's a previous low over here that we've moved down and below as price has been moving down. And it's clearly been watched by the market. So I always like to go back in time to the left. What structure can I see that we may have just been breaking below? Once structure is broken, it becomes resistance on a move back up. So on my day chart, I can see some, well, 120.74 is weekly resistance. There are two tops here, 120.56, 120.45. So whilst this is in a very mild uptrend, going against the weekly downtrend, we're into an area of resistance quite clearly there. So all you need to know is put the first top in, 120.45, then that next top's in between the weekly resistance. So you've got an area of resistance there. You don't need to put both lines in. That's 120.45. So whilst the day chart trend is in an uptrend, it could be failing there. In any event, any movements into that area keep getting hit by the sellers. So there's not a strong trend up against the weekly trend. We're just managing to have 2 weeks up at the moment. So let's just have a look at the 4-hour chart. 4-hour trend is just holding to higher tops and bottoms, but it can't hold. You know, that area that I've just drawn in there between 120.45 and 120.74, it's like a 30 pip range, 29 pip range. Any movement into that area, price moves back down, in, down, in, down. So you can watch that area through the week. We may well come back into that area. You start to see softness again, weakness, then price. That would be a good area to look for an opportunity to trade down. Don't forget where the weekly trend is. Weekly trend here is clearly down. We're just having a couple of weeks up. So maybe this is all that pair's got 2 weeks up. All right, so if you had the area drawn in, then you may be wise to a possible failure up there, but this could well come back up there again. So I'd be watching 120.45 up to 120.74. Do we revisit that area tomorrow for early London for another failure? Okay. Brian, you're asking me, let me just read your question. So does price move to 61 and 78 fib, leveling both high and low timeframes? Yeah, if you're drawing fibs across the high timeframes or the lower timeframes, it will work on all timeframes. But I don't get too involved on a 15-minute chart. I like to use it across the larger ranges, but it will work on lower timeframes too. All right, New Zealand yen. So I'm going to go to my other charts. Right, same deal. So a lot of these yen crosses that I'm showing you, rejection candles last week. Let me just get rid of my box. And I've discussed this 86.40 level countless weeks now in a row. Been watching from 86.40 up to 87.33 as a resistance area. And you can see you look left. Before we touched it last week, it fell there once, twice. It's fell there again. All right, now the weekly candle, see the rejection. In a perfect world, I'd like this to come up to a discount again to the higher levels of the fib. So if I'm drawing in my range of last week, drawing a fib from high down to the new low that we formed this week, then we haven't been up to the 62 or the 79. That might not do. And I'm quite happy with that. Doesn't matter to me if I don't trade a pair, but what I like to do is trade it at the best levels if it can get there. So getting back up to the 79 level at 86.20, or even up to 85, 89, or up to the 86 level would be ideal. Now it might not do that, so then I have to recalibrate things in my assessment. But at the moment, this could just, you know, not take the low out of the week and come all the way back up. So, you know, a lot of my trading is I'm just watching for the discount levels. The discount level to go and sell this pair from that rejection last week is at the 62 or the 79 areas. All right, not down here, up here. All right, so whilst this isn't giving you the opportunity to trade down up here, of course, the Aussie Yen, like I was discussing before, has been in at least in between the 62 and 79. This is giving you more of a chance just to sell at a discount. All right, New Zealand yen isn't doing that for you at the moment. But I've got the same bias and the same approach. It's just where the price can get up there. Now, I'm not going to trade Aussie yen and New Zealand yen all at the same time because they're correlated. You know, I'd have to have at least one of those trades at risk-free if I was going to trade. So whilst I'm showing you the same technique and kind of levels within last week's range, I'm not going to trade both at the same time because I'm really doubling up. All right, if one doesn't work, probably both won't work. Right, New Zealand dollar. Now, this is last week's candle. Just showing you where it formed as a range. I've got my fib drawn in. And again, price action isn't great. It's all very much range bound. It's consolidating back within the range of last week's whole range. But what we did do last week was move above a key area of resistance. Let me just get rid of that for the moment. So to the monthly chart, we've moved above this monthly low here, 62.04. All right, and actually became support for the market intra-week. So we may well be moving up as we're holding above that level now. We may well be moving up the range for the moment. The weekly trend is down, but we may be well having, you know, 2-3 weeks up the range. So at the moment on the daily here, you can see back on Thursday, right, Wednesday, Thursday, 62.04 became support at the lows of these 2 days to move up. So this might dip down to 62.04 again this week and hold. So 62.04 would be a good level to watch for support for this pair in the first instance. Let me just put my fib and range back in to show where it was. So 62.04 lines up with the 62% level of last week's range. So that would be a clear potential level of support if we, there's the higher last week. We haven't yet moved back down to the 62 yet. Of course, it looks like we're heading that way. Can we get into the area this week? And does it hold? Starts to hold, then what we might see is if we get some pullback and it starts to hold there, if I can find my Trying to find my rectangle. All right, just want to copy it. So if we get down to the 62 and it holds, then this week's candle, and we get down into here, we could well be then, moving up to put the week's high in once we've pulled back. All right, which would get us up to about 63, 67. So just looking to see if this can pull back to the 62% level, hold at the monthly support level, 62.04. Watching that level. All right. Now, if things get very negative and we get a clear break below 62.04, I don't know what's going to happen in the early parts of what will it be for us Thursday morning. I don't think I'm going to be up, but we may well move. If things get very negative and we move clearly back below 62.04, then 62.04 is a level to look as resistance. But at the moment, it proved to be support twice last week. All right, so watch it to be support again. And the 62 levels there coinciding with that level, okay? All right, dollar Canadian. Now, I don't trade this pair, but we have been discussing it. And what we've been seeing is that we've been seeing a long-term, I'm going to go to my other charts that are set up with a few more levels on. All right, the weekly chart here. This slide doesn't really need to be lined in. See all this consolidation that we've been having on the weekly chart. And we're just starting, it's still tough going, but it's now putting in like a higher top, higher bottom, another higher top. Doesn't want to get above and hold above this weekly resistance, this monthly level of resistance at 129.63, and now this level of resistance at 129.01 from here. There and there. Okay, now structurally though, it's still in an uptrend. It's moved up to a higher top, higher bottom, higher top, and that's probably a 127 extension of using the fib tool across the range, or very close. So at the moment, say that pull back to the 79, this could well now be moving back to the 79 level 2 on this pullback. Structure on the weekly chart trend is not changing. It's just doesn't want to exist above these resistance levels for too long. So this could be pulling back maybe to the 62 or the 79. So I'll just be monitoring those levels at the moment. How does it go at the 62? How does it go at the 79 on that pullback? Just need to rejiggle that to the low. All right, so that's what I'll be looking at that if I was trading that pair. Where does it find support? It looks like it's getting a little bit of support from these day chart lows, but it might get a dip down to the 62. Before then, do the buyers come in to put the next weekly leg up? All right, so it's having a pullback on that weekly chart, watching where does that weekly pullback finish at the moment. I don't think it's finished yet. When it hasn't pulled back to the 62 or the 79, I'm always concerned that it hasn't finished. So if I was looking to engage on that pair as an approach to buy with a longer term trend on the weekly, for me, it hasn't pulled back enough yet. All right. Now, sometimes it doesn't pull back enough. Like for me, pulling back to 62 or the 79 is pulling back enough. Sometimes it won't quite get to the 62 and then go off, but I'm always concerned that if it hasn't pulled back to the 62, it hasn't finished its pullback yet. So I'll just leave those pairs alone. And yes, of course, I can miss out, but statistically, more often than not, price will pull back to the 62 or the 79. So I'm always waiting for those pullbacks. All right, so that's what I'll be monitoring there on the Canadian. Dollar yen. Now, last 2 days have been rather consolidatory. We had quite a heavy sell-off on Friday, but if I go to my other charts, what I've noticed is we know it's been in a long-term trend. Get my dollar yen up. And we had a negative week last week, but I don't know if that's really finishing the trend. We know on the monthly chart that we're very strongly up. All right. Next level of monthly resistance that we haven't touched yet on the way up, 141.53 over there. Had that in, I thought, but maybe it just got deleted accidentally. 141.53 is the next monthly level challenge. So the monthly's up, having a bit of a pullback on the candle. Weekly, we've just had a week down last week, just this monthly level, 135.16, we're clearly holding above that level, an old monthly top that we've broken. Let's go back again there, that top over here. Now, what I'm noticing within the candle that was formed for this month, okay, there's the current month, and unless we decline more and move below the current low for the month, we might have already formed the candle for the month. All right, so getting back to my webinar last week about candle ranges, using the weekly or monthly candles, as I said last week, sometimes I'm looking at the candle range. As we get to the latter end of the month, I'm starting to use the range of the current month, not last month. All right, last month's range is no longer useful to me. This month's range that we're trading in or forming could have formed the whole range for this month, okay, already. So with that being said, what I noticed was I can get my, doesn't want to do it now. What time frame was I on? Here we go. There's that time frame. I deleted them off. All right, so 4-hour chart. So this blue candle, that's just referencing the blue monthly candle that we're forming. That's the low of the month at the moment. That's the high of the month at the moment. And let me get rid of that other fib. Right. So what I'm noticing is we've pulled back to, if that is the low of the month and it's not going to change, that's the high of the month, it's not going to change. We may have well already formed last month, the current month's candle. So what I notice is we've pulled back to the 79% of that range. And then we've started to not quite put an uptrend in yet, but if we move above this top here, that's going to start to put the 4-hour chart into a bullish structure. And this could be the pullback before we're moving back up to challenge 139.38. So that's how I'm looking at this. So Slavia, we could be consolidating to break through resistance after Thursday morning. Now this may already start to drift up ahead of Thursday news, or it could just keep consolidating. I mean, yes, we can move down once the news comes out, but looking at this structurally, it just looks to me that we may have pulled back to 79 on the candle that we've been forming to move up long term, okay? Slav is saying to me that was, all right, so your comment was on the Canadian. So, sorry, Slav, so your commentary was, could be consolidating to break through resistance after Thursday morning. So you were referencing the Canadian. Yeah, it could be. Or we, whatever comes out, let's just go back to the Canadian a moment. Whatever comes out on the news, back to the day. Get my Canadian, get the right chart up. Here we go. Yeah, this resistance up here. Then once the FOMC news comes out, yeah, it could move through there. Or when the FOMC news comes out, it could be pulling back to the 62 or the 79 first of all, before then it turns around. So in my mind, if in a perfect world, I'd like to see it pull back to one of those levels when the news comes out, because I can't really get long into resistance. So it'd be great if it pulled back before then moved up and through. But I mean, if you're wanting to, if this moves through resistance when the news comes out, you'd already have to have a position. So it's whether or not you want to hold a position when that news comes out. For me, in a perfect world, it'd be great if it then pulled back a bit to one of these levels and then offer you the opportunity to get in before it moved up and through. But market doesn't always give you the opportunity you're looking for, especially when you're waiting for, a very volatile news event. So, some of the levels that we're discussing and watching would be great in a perfect world, but it all depends what the news does. Does the news actually offer us the opportunity to get in? Some of these levels, I'm not going to trade at these levels till after the news, because I don't want to be in and then the news goes totally the wrong way and then, hurts me. So I'd rather miss than have to lose some money and make it back. So sometimes the news will come out and then price will go to a perfect level for me so that I can, trade around. Sometimes it doesn't, and that's just trading. So if this back to the dollar yen on my other charts, if we do start to move above that high there at 136.78, that's going to start to put this structurally in an uptrend on the 4-hour, and then we could well be, this range, this candle range that we're forming could now well get copied up like so, just in line with the overall trend that we're seeing on the dollar yen at the moment. Okay, this could just be the dip area to put in another range up like we did here. Okay, so that's what I'm watching, looking for on the dollar yen. And once the news comes out, I'll have to see whether or not it offers a good opportunity to get in to trade up, if that's the way things run. All right, got something in my chat here to discuss. All right, I'm just pausing while I read this. It's quite long. All right, so Karen, I'm just going to read out what he's saying. So he said, on the previous chart, the dollar Canadian, you want the 62 to hit, or it may still come back there later. This is with a higher time frame, yes. So like you say, monthly or weekly, and lower time frame, like 4 hours, smaller 1 hour and 15-minute charts. We can be a bit more relaxed and enter if we like the price, even if it's short of the 62 by a few pips. It's okay. It's okay if it's just a couple of pips, but in my mind, when I'm looking at, say, the weekly chart of, let me get, I don't mind if that misses that 62 by a couple of pips, but for me at the moment, it's miles away from that 62. All right, so if I was going to engage on this pair, looking at the weekly structure, the fact that we're having a pullback, I'd want it to get pretty much that 62 before I'd start to engage. All right, I don't really care what the 15-minute chart's doing at the moment. I want to see that get back to the 62 approximately within a few pips. All right, if it doesn't, then I'm not interested. If that's 50 pips away from that level, to me, it's still got 50 pips to go. So I'm not going to engage on that. Now, that might mean I miss, but I much prefer, for example, the dollar yen, because it's pulled back to the 60. It's already pulled back through the 62 and also through the 79. So now I know potentially that's done its retracement. If it doesn't pull back to the 62, pretty much on the large time frames that I'm looking at, I'm always concerned that it hasn't finished yet, because your 15-minute chart entry may go positive and it goes up 20, 30 pips, but then things change and then it wants to drop down to the 62% on the weekly. So all you've seen is a little bit of noise on the 15-minute chart, and we haven't finished a pullback. So I like things to be exact. Sometimes price doesn't want to give me exactly what I'm looking for. And if it doesn't, then I just miss out engaging on that pair, but I'm quite happy with that. But I don't want to get myself in a position where something's gotten short from a level that I'm watching, or say short from a fib level where price normally gets to. If it's short and it normally gets there, then I don't want to be getting in too soon. I'd rather miss and then try and structure something else a couple of days later, okay? All right. Now let's have a look at gold as the last pair to look at. I actually did a bit of a video on this today. Now, if you've been following gold, this is in a very good area. I don't trade gold, but monthly chart here, we're pulling into this. We missed this double bottom by a couple of points, pips, whatever you call them on gold. Okay, I think you call them dollars, don't you? It's priced in dollars, so it pulled back to 1678. Well, the low is at 1678.9. Okay, so $1,678.90. We actually traded down to approximately a couple of dollars short. All right, let's call it points, dollars, it's all the same thing. 2 points short. So pretty much traded to the level. And then we had what we call a piercing pattern on the weekly chart, candlestick pattern there. All right, so got very close to trading at the support level. The buyers came in. Now, the weekly trend is down, but once you're down to critical level support, to me, that doesn't really matter. You're looking at the potential of a trend change here now. So do you see the chart showing that trend change? On the day chart, what I would in the perfect world like to see a higher top form, but it hasn't done that yet. All right. But we may well just come back to retest this day chart low at 1697 and find support there now, because we formed that low, we false broke it, moved back above. Are we going to come down and kind of put a bit of a head and shoulder pattern in there on gold? So on the 4-hour chart, just as an area to watch, I posted today was drawing a fib across that range. Then the 62.79 level coincides with that day support level. So a good area to watch for a dip before maybe we get another run up. You know, at the moment, you have to take it that we failed down here on support after that weekly reversal. So then is price going to come back at discount to the 62, the 79% level, or just to the day support level and hold, and then offer you a setup to trade up? All right. This could be an area where you could definitely get a long-term trade off the bat to trade back up the range, because if this is just going to stay range bound on the major time frame, then back to the monthly chart, this could, go all the way back up to the top. Now, of course, we could break support, but at the moment, the weekly chart saw some buying pressures. So, there is a potential of a reversal down here at the moment, back up the range. All right. Even if it's only back up to this weekly low that we broke through, 1786. All right. That would still give you a good profit target. The first major hurdle from moving up from down here would be to move back above that area there. All right. So you need to know that level anyway. It's 178.86 and change, which is 74 cents. All right. So that's what looks like a possible reversal there, but after the FOMC statement, depending on what they do, then we could move down through. But when you're trading, you have to set your stops. You have to start to make your analysis make sense. Always set your stops so that if you're engaging within the market, so back to that, 4-hour. If you like to look at that and you're engaging down there within that fib area, make sure you're setting your stops, because price might just continue straight down through and break the major area. You don't want to be holding a short here if price breaks that major area, because if it breaks that major area, then it could run, what happens if it runs well through and you're short from higher up. All right. So whenever you're engaging at major levels, you've got to make sure you manage your risk, set your stops. Price breaks below, say 16, you could have your stop $10 below 1678, for example. So it trades at 1668, you're out because you're wrong. You can't be holding a trade here underneath major support and you're wrong. All right, because it could keep going. So manage your risk. If you like that, I don't trade gold, so I actually won't be trading that, but I know some of my colleagues, they trade gold and they're watching that. They've been watching that failure down there. Now they're waiting for a pullback. So if you like gold, this is a very, you don't get many opportunities where you're at major levels of support where they could hold for a major reversal. So this is a major time on gold. In actual fact, we're talking about a play to the upside here. There's always a play to the downside in that. Back to the weekly chart here. If we break below 1678, you should then be looking for, at some point, for 1678 to become resistance to trade down. So you could be looking for a long. It could work. However, you could be looking for a long and it doesn't work, so you end up having a losing trade. But then if we clearly break support, you then need to think about, okay, how do I get that loss back? Do I trade down the chart from a major failure of support? Because if we get a major failure of support, potentially we have then a double top on gold here. So I draw my fib from double top down to the low there. If that's a major double top, we could be running down to a double top price projection down here at 1278, which I know is a long way away, but there's a couple of plays here to support hold trade back up, to support break for a major run down. All right, so we'll just have to wait and see what the next couple of weeks brings. It's either going to, obviously, we will either get a potentially strong bounce up or a strong break, one of the two. Or we could just slowly consolidate and support as well. Okay, so this, I guess, 3 scenarios, but we can monitor to see what happens on that. And if you like to trade gold, then get yourself set. All right, everybody, any final questions before we conclude this evening? Just to let you know what's coming up. Last week on Wednesday's education webinar, I took you through the candle ranges. What I'm going to be doing, I get my webinar page up. Tomorrow I'm going to be going through using the monthly and weekly highs and lows as key support or resistance levels to trade around. So if the webinar page has been updated, so I don't know if it's fully working 100%. Hopefully it is. Maybe it's saying there's no webinar available because we're actually in one at the moment, but it should say tomorrow there's an education webinar on monthly, weekly candles. So if you're interested in that, just go and register your interest. Thursday, we're going to go through live market analysis again. So that will be after the FOMC statement. So we can have a look at how the levels are going. Where is price after the interest rate statements? Do we need to come up with some new levels, or are things starting to develop from that? And is anything setting up post FOMC statement? Okay, so that's what's coming up. So if you've got the time, just run over to this web page, the webinar page, and register your interest. All right, everybody, if you're on our YouTube live stream, I can't see the chat, but if you're on there, thanks for attending. If you'd like to attend the live webinars, simply use the link that I put in the chat to register your interest. Thanks, Ed. Cameron, thank you. So I'm just going to hang around for maybe for a minute. If there's any final questions, I might just click through the chart, see what's been going on since we've been going through. Some of the pairs are very range bound at the moment. Now, these Aussie pairs are just breaking down a little bit from these resistance levels, but they may well revisit. This Aussie may well revisit 69.67. All right, Euro Yen's breaking down though, isn't it? It's not got up to those discount levels that I'm watching. So the Euro Dollar is breaking down. Pound Yen might be getting a bit of support at 164 here. So, 64 pips up to 164.64. Doesn't take much for the Pound Yen to move 64 pips, does it? So 164.64 could easily be retested and failed again up there. Those levels that we're failing at, 120.45 up to 120.74, they could be easily retested again as well on the pound dollar. All right, so got some levels there to work with. I think we might tomorrow have, today, tomorrow, quite range bound ahead of the FOMC. When we got big news events like that coming out, I like to have my levels, my discount levels all ready for myself, so that once the news comes out and if the price gets stretched up to the discount levels, then I might have an opportunity to trade after the news. Cameron, I'm just looking at your question. Well, the euro is weakening because we're moving down there at the moment, or the US dollar is getting stronger, one of the two. All right. But I'm pretty sure, even though that euro is weakening or moving down the chart, it may well still stay, pretty much range bound. That 4-hour chart at the moment, may only come down to here where it got down on Friday and then pop back up. All right. It's hard to say at the moment. I've just got my fingers. I've been waiting for the best part of a week and a half to see if price can get up to 103.40. So I'm hoping that the news gets it up there and it's stretched, hits resistance and fails. Interest rates are going to rise on the US side, whether it's 50 base points, 75 base points. The interest rate differential favors the euro US dollar moving down. But if we can get a pop up to a higher price, the interest rate differential at the moment favors the US dollar. So from a price perspective, we should see, generally speaking, if we can get price to move up, that longer term, it will move back down in line with that interest rate differential favoring the US side, okay? All right, everybody, we'll catch up on Thursday on the live charts, see what the FOMC's done, and then we'll see how the levels are working. All right, everybody, thanks very much.